Good afternoon, everyone, and welcome to Stock Market Today for Monday, June 16th. It's Alissa Coram here. And today, a positive expectation breaker for the stock market with solid gains for the major indexes. We will explain what that means. And joining me now to discuss that and a couple of stocks for the radar is my colleague, Justin Nielsen. Justin, we've got
Well,
a lot to discuss to kick
yeah,
off
and
the
we'll
week.
go even more than a couple. We'll go a few, or maybe even several. So, but yes, that positive expectation breaker is something we will definitely talk a little bit about. It's always nice to be pleasantly surprised by more strength than you expected. But we'll also talk about a few stocks. A lot of strength in the retail area today. So we'll talk about Tapestry and also Brinker International. I do have a position in that. And then we'll round it out because financials were also looking pretty strong. And we'll take a look at Interactive Broker. That's IBKR.
Yeah, and maybe a couple of bonus stocks, it sounds
A
like.
few bonus stocks I think we have
All
up
right.
up our sleeves.
We'll have you toss in a
And
few of those.
ETFs, why not?
Oh, sure. Okay, let's take a look at the major indexes to kick things off. We'll start with a look at the NASDAQ composite, up about 1.5% on the day, leading the upside, followed by the Russell 2000, up about 1.1% headed into the final stretch of the day. The S&P 500 up 0.9%, and the Dow was up about 0.75%, right around that 200-day line. So positive expectation breaker. What do we mean by that? Well, with the declines that we saw on Friday, it seemed like the normal and natural thing would be to see further weakness and at least a test of that 21-day line, especially with Wednesday's downside reversal. So it seemed like we could have seen a pullback, especially with the geopolitical tensions, but we did not get that, Justin. We got a lot of strength to kick off the week.
Yeah, and so what this market is telling me is resilience. That's the word of the day, I think, because besides the downside reversal on Wednesday, which it was kind of on the cusp because
Yeah,
it
it's a
didn't
little
have the
mild.
big spread. It closed where it closed, but the week before we had a very clear downside reversal. I mean, that's just like the picture perfect downside reversal where you do get weakness afterwards, and we didn't. So you got one that was kind of close to being a downside reversal. Did we get extra weakness? No, not really. We held up there. And then here we are. Even though the volume was lighter on the NASDAQ, it was being compared to a very heavy day. As far as I know, the heaviest day in the history of the NASDAQ, going back to 1973 in my data. And look, that was two stocks that were 2 cents and 3 cents that accounted for 57% of that volume. So the reality is Friday was a distribution day, and in spirit, let's say, but in reality, it was a distribution day. You would have expected further weakness. You and Mike were talking about this on Friday. You build in an expectation, a thesis of what you think was going to happen. And here again, just like that downside reversal a couple weeks ago, like the one on Wednesday, you just didn't have that weakness materialize. And that's a good thing. When the market surprises you to the upside, that's a good thing. So you have to be careful. Again, you don't want to panic by one day of negative activity. And again, you can kind of get a little bit too smart for your britches where you're like, oh, well, I don't want to lose any money. And that's really hard to do in the market. Sometimes you have to sacrifice a little bit of money so that you don't lose your positions. And this is why we have the rules for a power trend. And as a reminder, the power trend is when we have the 21 trending above that 50-day moving average line. There's a few other things, but that's the main thing. And it just kind of tells us, slow down your selling. Lean into the bullishness a little bit more because you don't want to lose your position. So if you're a swing trader, maybe you were coming in a little bit more on Friday in terms of your exposure. But the reason why we didn't change our exposure for the big picture was because we hadn't even come down to the 21-day, even though we expected we might. It was kind of like, this is a market that's innocent until proven guilty, as opposed to when you're in a bear market, it's kind of guilty until proven innocent.
Right. I love all of that perspective, Justin. Leaning bullish here, looking at the 21-day line as a big guardrail or a bumper for us potentially. And I think the other side of the coin, though, is you also don't want to get complacent. And you've been great
Right.
about reminding the audience on IBD Live. Well, just because we're in a power trend doesn't mean that will continue. You still do have to make some of those adjustments, as you said. So we'll continue to watch the market day by day. And for now, it's looking pretty good, very resilient, as you said.
And the reality is, I mean, we've had enough headlines that in a weaker market would absolutely decimate stocks. And while some individual stocks will take it on the chin harder than others, the overall market has really been, again, very resilient. And this isn't a market where it's just the heavy market cap weighted stocks. You look at in the case of the NASDAQ, if you look at QQEW, that's holding up really nicely. That's above its 21-day moving average line. We can look at RSP, which is the equal weighted S&P 500, and that's been getting support right there at its 21-day moving average line and its 200-day moving average line. So it's a little bit more broad. And even though the IWM, the small caps, have just been like, I mean, they've been a real big tease, like, oh, we're going to go. And then they don't. We had the 200-day moving average line acting as resistance here again, but we are testing that 21-day moving average line over and over again and bouncing from it. So eventually, maybe one of these times we can get above that 200-day moving average line and maybe a little bit of participation from the small caps as well.
Well said. Let's take a look at the S&P 500. I know we just looked at RSP, but the S&P back above 6,000. So that's good to see. We're getting close to those prior all-time highs, Justin. It wouldn't take much.
No, not at all. And it's interesting because that 6,000 level, if you just kind of draw a line to the left there, you see that that's kind of an important area where it would get above it and then, really cross below it in a big way. It was able to stay above it for a few weeks, but there was a lot of back and forth in that time period, including DeepSeek and questions with the Fed and everything like that. But the fact that we did dip below 6,000 again made me think, okay, this could come in a little bit more, but we just didn't stay there. And so now, in the same way, when you cross above a level and you can't stay there, and you're like, oh, okay, that's a little negative. The fact that we go below that level and can't stay there for more than a day, I mean, that's pretty positive as well. So now we just need to see that flip side. Hey, exactly. You're above 6,000. Can you stay up there?
Yes. Okay. And the Dow back above the 200-day line or right around there. So we are seeing participation from the blue chips as well, even if we're seeing lagging performance.
Yeah. And look, this is a 30 stock index. It's price weighted. You've got some things in there that are just lackluster at best. UNH definitely made the Dow take a really hard hit, and it's continuing to drag on the Dow. It's not really rebounding, and so you've got sometimes single stocks that can have an overwhelming weight on the index and really drag it down. So I'm really kind of leaning more towards the strength in the NASDAQ, the S&P 500, and their equal weighted components to kind of tell me I'm okay being on the bullish side.
Okay, a couple of ETFs to take a look at. Let's check in on gold GLD. I do have a position on this. This was a hedge last week, and now with stocks bouncing today, a little bit of a counterweight there, but still holding above the 21-day moving average, Justin.
Yeah, it's almost one of those things that you don't want it to do well because it probably means that you're taking hits on your other positions. But in this case, it's been a little bit tougher with this, from April, the end of April to May here. It's been in this kind of basing pattern, hasn't really kind of broken out above it. It's just been a few days up and then pulling back. Let's go to the weekly chart on this. And that kind of really shows how strong it, or even the monthly chart, how strong it came out of that monthly chart and really started trending nicely. So overall, look, the trend is still intact. It's fairly tight on this monthly chart here, but that can be very difficult on the short term as you get wiggled and wobbled around in this trade, especially when you're seeing on a day like today, when so many stocks were looking good, it's tough to really hold on to the things that aren't doing well, but they still, again, depending on your style, a hedge here isn't necessarily a bad thing.
Yeah, and I've said many times, yet I didn't do it. I waited for the trend line entry, but really think a good way to play gold and the gold miners are the pullbacks because of
Absolutely.
exactly what you said. The wiggles and wobbles, just the way it trades, it's very different than a growth stock. So
Mhm.
something to keep in mind there. So we'll have to see if it can continue to hold support at that 50-day.
And to Scott St. Clair's credit, he was kind of talking about on the flip side of the pullback is how it really, bounced off that 50-day moving average line and kind of went at an angle that it typically doesn't in April. Yeah, exactly what you're marking there, Allie. That was kind of climactic for gold, at least. And that's really kind of what precipitated this whole, sideways action that we've been seeing. So that's pretty normal when you kind of go at an angle you're not used to. Going sideways to kind of digest that's pretty healthy, actually.
Yeah. Well, let's take a look at the new gold Bitcoin IBIT. I do have a position here as well from around that follow through day, up 3.5% today. This had a great move for a couple of weeks, and it's now forming a sideways range that looks pretty orderly to me, Justin.
It does to me as well. I do have a position as well. I think we got in around the same time, although I've had to be a little bit in and out because of restriction list stuff with Swing Trader. I can't remember if we have this on currently, but I still have the position. I think it looks interesting. It got that support at the 21-day moving average line. And it's interesting on a day where gold was down, IBIT was up. So sometimes this is your alternative to dollars, your safe haven for some people, and on the flip side, sometimes it's your risk on. And so today, I was viewing this as your risk on, the way that it was up so significantly.
Yeah, we did see a number of risk on areas cranking up the heat today. Okay, here's a look at XLE with the Mideast tensions. Energy stocks, oil in focus. We saw a little bit of a down day here, but pretty muted after a big move last week.
Yeah, and I will say that for XLE at least, a lot of the stocks, we could even look at RSPG, which is the equal weighted of the energy. Looks very similar. So as much as we always say, okay, XLE is dominated by Chevron and ExxonMobil, you can kind of see they're all acting in the same way, but there are those that look very different. RRC, for instance, AR, they look very different in that energy space. A lot of the explorers and producers were really strong last week. XOP is one way to play that, but it seems like the strength is really in some of these individual stocks. But you have to also be aware when you're kind of going off of headlines to create the price for your move. Headlines can go the other way, and so you've got to be careful there.
Yes. Okay, let's take a little look at SMH. The chip sector up 2.5% today, so outperforming the broad market, Justin.
Yeah, so I mean, look, this is a market where chips are so important with so much of the technology. Technology RSPT, which is the equal weighted technology, was having a good day as well. That was looking strong. So again, broad based in the technology sector for the sector spider funds, and SMH was leading there. So that's a good thing. It's what you want to see.
Okay. And then let's take a look at RSPD. This is the consumer discretionary. What are you seeing here, Justin?
Well, a lot of retail stocks were looking very interesting today. And so this was up 1.8%. And this I was just going to use as my transition to getting to the individual stocks. So we can start with Tapestry, TPR. This was the former coach. For those of you that traded this back in the early aughts, phenomenal move. Who knew that bags could be so important, and they were in those early aughts. But this is one that had a very nice looking day today. A lot of stocks, as the market has been going sideways, have formed these handles, and so now we've been just waiting for these to break out of those handles. And so Tapestry, arguably, kind of started moving last week, and then of course on Friday it kind of wasn't looking as great, but like many stocks, the expectation breaker to the positive side was there for Tapestry as well. And look, this was not alone. You had other members like in RL, which is Ralph Lauren, which is in the apparel clothing. You also had members like in the retail space, Urban Outfitters, Ulta Beauty was looking interesting. These are two stocks that had really big gaps up and really held those gaps and looked strong today, breaking downtrends. So there was kind of this whole space had a lot of members in it, whether it was in the retail specialty, the retail apparel, or the apparel clothing manufacturers. There was a lot of strength here today.
There sure was. Okay, so that's a look at TPR and then a quick look at the fundamentals. We are seeing improvement in both the top and bottom line growth. Top line growth is still in the single digits, but again, turning around, and we are seeing renewed strength in the earnings growth as well, with double-digit growth in the 20% plus range the last 2 quarters here, Justin. Also want to point out that tight action in the handle on the weekly.
Yeah. Absolutely. And just from a fundamental side, since you brought up the strength, you had a great trade in Abercrombie & Fitch, the ANF, a while back, and you recognized something going on that you're like, hey, I'm going back to buying my jeans and stuff like that. Yeah. Has there been anything on the fundamental side that you've been noticing trending wise?
With anything retail,
with any of the retail, I'm getting your input as a shopper.
Intel, yes. Ralph Lauren. I like Ralph Lauren. They have their own app that you can shop through, which I have perused before. So I'm not a buyer of the stock just yet. With that single digit sales growth, I think the thing that was appealing to me about Abercrombie at the time that I was trading it, we need to backtrack at least a year. And then once I do that, of course, the little earnings things go away. But I can show it on the current weekly, perhaps. It was during a time where we were seeing strong double-digit top-line growth and triple-digit bottom-line growth. So I think in addition to being familiar with the story myself as a shopper, I loved seeing that triple-digit growth along with that really notable price outperformance. So those were some of the standout things there for me for Abercrombie at that time.
Absolutely. Makes a lot of sense. So again, this is where kind of knowing a little bit about the company, having some experience with it gives you a little bit of an edge in holding it and having that conviction like you had with ANF. But on the fundamental side, if we switch gears, let's go to eat, because Brinker, we've been kind of scratching our heads on this one, to be honest with you, because usually with restaurants, and for those that aren't familiar with the Brinker name, you probably recognize Chili's, and we were talking about some of their commercials and singing songs. Yes, they got their jingles dialed in. Usually with restaurants, you really kind of are going off of a expansion play. As you start, you've got like 100 stores, and then you're like, we're looking to have 1,000 stores in 5 years or whatever. Brinker isn't necessarily doing the whole expansion thing. It's a little bit more, I guess it's already established in that regard, but these are some phenomenal earnings. And I don't know if there's efficiencies that they're getting, or if it's just that they're, maybe I was just at Chili's for one of my son's fundraisers, and they do have those little things on the tables where you can play games, you can pay your check, and it tells you, hey, you know what, you want to order a drink? There's happy hours,
rewards.
There's all sorts of things deals. Like that going on. So certainly one of the things that just sticks out on this is that fundamental side. So unlike those retail stocks that we were looking at that had those single digit sales, this has double digit sales and triple digit earnings, which is just, again, phenomenal. And so here you have a nice cup with handle. If you go back to the daily, and I don't know if I disclosed that I do have a position in this.
Yes.
So, I've been in and out of this one again because of restriction purposes. I did start buying on that day. And I've just been kind of waiting for this opportunity to buy it again. And I did, and then I had to sell it because of restriction. But I think this looks good coming out of this little shelf here. So I did buy it back. So I'm a buyer today. I think it looks strong, and the relative strength line is showing power as well.
It sure is. We have a blue dot on the weekly, and our relative strength line is looking at a stock's performance versus the S&P 500 on a day-to-day basis. So if you're seeing that at new highs, especially before the stock is hitting a new high ground, that's really underperforming the stocks, underscoring the outperformance for the stock. But yeah, I have previously ordered chilies on DoorDash.
Okay.
So yeah, so not only attracting in-person diners, but also serving the takeout market as well. Because I had, when it was having this explosive move last year, I had to re-experience the chilies from my, back from the high school date night days to, okay, well, what are they doing now? And I think one of the things, in addition to sort of going viral on social media for some of their menu options, it's also the pricing. As we're seeing a lot of fast food options getting increasingly expensive, I think they're trying to position themselves as competitive and more value, or bang for your buck for what you're getting.
Absolutely. And you know what, Allie, since you brought up Dash, probably worth taking a quick look at that,
Yep. I
because
set us up for that, didn't
I
I?
know, but it also came out of its own little shelf there.
It did.
And talk about your triple digit earnings growth. Now, keep in mind, this is
Yeah.
coming off of negative EPS numbers.
Right.
That's what that little hashtag is there for, to
Mhm.
let you know that. But strong sales growth, and look, those are not small numbers that it's coming off of. When you're coming off of 2 billion, each quarter. That's not nothing. So DoorDash really strong looking, and also coming out of a little shelf after holding very tight, just not giving up anything in this latest little sideways action that the market went through.
Yeah, a little add-on opportunity there for Dash and Eat today. Okay, let's take a look at IBKR. This is Interactive Brokers, clearing a trend line, bouncing off of the 21-day.
Yeah, so this was something that we did add to Swing Trader today. Looks strong. We like to see those those crosses of downtrends, bounces off of 21-day moving average lines. This was the look that we saw in a lot of strong stocks today. A lot of times I will also kind of take my my market surge and sort things by the daily closing range. And this is updated throughout the day. This is one that had a very strong, it kind of stayed up at the top of its range for most of the day. So that was a positive look for it there. If you look at XLF, look, it's a kind of a mixed bag on the financial side, but Interactive Brokers, there are a lot of group mates that are up there with it, whether it's in that space itself, or if you go to some of the big banks like JP Morgan, which got added to leaderboard today, was kind of popping off out of a bounce of its 21-day moving average line and a sideways area. So this financial area, definitely something worth keeping your eye on.
Yeah, and a great reminder that we like doing the top-down approach and the bottom-up. So whether it's you're going sector and filtering down, or screening for top-tier fundamentals and technicals and doing a bottom-up approach. So yeah, obviously we love looking at sector rotation, but sometimes it is nice, Justin, as you mentioned, to look underneath the hood, what's actually driving the performance and who are the standouts.
Yeah, at the end of the day, whether you go top down or bottom up, the end result of the Investor's Business Daily methodology is looking for strength, and you can do it from either direction. That's just kind of your preference. Some people like looking at all the stocks and then kind of saying, okay, am I noticing any themes with the strong stocks? And some people like going the other way and say, hey, let me look at the sectors and see if I'm observing strength there, and then let me go for the strongest stocks. So either way works, but strength is what we're really after.
Well said. All right, Justin, that is it from us for today. We appreciate it as always.
Hey, thanks a lot.
Yeah. And thanks everyone for tuning in. That's it from us for today, but we will be back with more tomorrow morning on IBD Live. Investors.com/IBD Live for all of the details. David Ryan will be back on the show with the usual Tuesday crew. Actually, maybe we have some switcheroos. It's getting to be that summertime where people are off, but it's always a fun group no matter who is on the show. So looking forward to that Tuesday episode. IBD Live starting 10 minutes before the opening bell. We will see you there. And then we'll also see you right back here tomorrow after the close.